So this is my favorite type of confirmation. My favorite entry signal is a chart pattern inside or at a supply or demand zone. So any type of chart pattern is going to give us extra confirmation, and it's going to give us more confluence to take the trade long or short in an imbalance. So what I mean by extra confirmation and more confluence is that not only are we at a supply or demand zone, but we also have a bullish, let's say bullish chart pattern at a demand zone or a bearish chart pattern at a supply zone. So think of the imbalance as the cake, and the chart pattern is the icing on the cake. It's like going to Chipotle, ordering guacamole on your burrito. You get to the counter, you see the receipt, and they never charge you for guacamole. It's an even better type of scenario. So these happen inside or outside of the zone, doesn't matter. And this just will enable us, and it's going to give us a more defined risk, because the chart pattern actually will define our risk. If we come above or below the level, below or above the chart pattern, that's going to be the area where we're looking to stop out at. The ones I mainly focus on are double tops and double bottoms, triple tops and triple bottoms, rising wedges, falling wedges, pennants, and failed flags, and technically, any other chart pattern, whether it be a reversal pattern, whether it be a bullish pattern. Here we have a bull flag, hold this up, bull flag, bull pennant, bear's pennant, bear flag, any type of failing patterns. Some are continuation patterns and some are reversal patterns. Any type of continuation pattern that fails will be confluent, and any type of reversal pattern that works out is another confirmation to take the trade. So whatever chart pattern you want to see, there's no reason to go crazy. The ones that I see the most are double tops, double bottoms, triple tops, triple bottoms, rising wedges and falling wedges, and sometimes wedge breaks, pennants, stuff like that. Like I said, just don't go crazy looking at all types of chart patterns. Keep it simple, double tops, double bottoms, head and shoulders, rising wedges, falling wedges. What you could do is you could go on Google. Besides some of the resources in the chat room, besides some of the resources if you have the A to Z course, besides the point, you can go on Google, type in some chart patterns. If you see something, it's kind of common sense by looking at the chart that maybe this is something that we're going to have more downside or more upside to. Just keep it very simple. Here we have BABA, and we have a 4-hour chart where we have a valid move to the upside, a base before the close, and then we gapped up and rallied from the open all the way for the next couple of days, about 20 points. So this basing right here is a valid demand zone. And the next time we traded at the level was exactly 1 month later. And right here, if you look to the right on an intraday chart, a couple things I want to point out right here. First thing is, if you remember from the last lesson, is look, we had volume confirmation, heavy selling pressure coming in. And in fact, not only did we have volume, we had new demand forming on a 5-minute chart. We had a drop, a base at demand. We hit it perfectly. Let me just remove this label. Drop, a base, and then another rally. As soon as we start coming to the upside, which is right here, next candle, take it long. Don't buy it all the way up here. Buy it up here maybe, or buy it somewhere in this area. Put your stop below the low. Very, very tight risk. So look what happens. We come up, right? Now, a lot of people, they're going to start panicking a little bit. They see the stock coming down. If you stick to your original plan, there's no reason to panic. It came down, and look what happened. You could consider it a double bottom, a high or low, whatever the case may be, but we start coming up. If you are not, so let's put this in a perspective that we missed the first move. We missed this move right here. We have no position. Now the stock starts making another low right here. Maybe take it long right here, buy calls, put your stop either below this low, or maybe put your stop below this low if you have a little bit of a higher risk tolerance. But this is a valid entry. My personal stop would be below this first low, right here where my cursor's at. And then let's see what happens. And then this thing started ripping, volume coming through, some follow through, and a nice move from this demand zone. So there's a couple confirmations here, a couple of different setups, and a couple of different trades that you could have taken. Here we have the S&P 500 sold off into 45-minute demand. If you missed the entry here, there's always going to be a retest if the trade is supposed to work in your favor. If it's meant to be, it's meant to be. The market will always come back to you if you missed the first entry. So down here, we start stalling out. And I'm not going to lie, it looks like we're about to break down to the downside, break below the low, break support. But look what happens. We start stalling out. The market starts consolidating down here, creating new demand if we do, in fact, rally after this base over here. Fast forward. Anywhere in this area after the consolidation is a valid place to take it long. If you are a little bit more conservative and you want to get a little more confirmation, take it long maybe up here. Put your stop below the low. You're risking about 9 or so points. Double bottom inside of demand is extra confirmation. This thing ripped, rejected at VWAP, and then look what happened. We came down and we triple bottom now inside of a demand zone. Go ahead. Triple bottom, in fact, created new demand on a 5-minute time frame. Now, I don't really go scanning for 5-minute zones, but if I see a drop, a base, and a rally inside of a demand zone, a previous existing one, confluent with a triple bottom, go ahead, take it long. We rallied right towards the end of the day for 50 points on the S&P 500. That would have been a sick trade in SPY options. Here we have a rising wedge on NASDAQ 100 future. from this basing candle right where my cursor's at. It's a valid 1 hour zone. Point here is that we were making a rising wedge. What I mean by this is that the highs were breaking the previous highs, so we were making higher highs, and the pullbacks were making higher lows, meaning they weren't coming back from the previous lows. So this is a very bullish pattern, and the fact that we're inside supply, we eventually broke the trend. So on this day that we rejected the supply, broke the rising wedge to the downside, maybe we have to focus now. We don't have to take the trade. You could take the trade. We don't have to, but maybe we should focus on some bearish continuation patterns, intraday perspective, or we could look on, let's say, a 5-minute chart and see how it reacted to the trend line break. So let me try to find it. So this will help control our bias. Now that we're below this, we rejected supply. I'm not going to play to the bull side. I'm not going to play to the long side today. I'm only going to be a bear. So we in fact did break the trend line, held below VWAP. So there's some valid, you could scalp during this day, but the point is just to not be a bull, be a bear today, and find some nice trading setups intraday. Again, pretty straightforward chart patterns inside of a supply or demand zone. Here we have the S&P 500. We rallied pretty hard right into the supply zone. Again, we did create supply inside of the zone, so valid to take it short here. But if you missed the first entry, we double topped inside of supply. We made a top here, another top here, somewhat of a lower high double top type of thing. Take the trade short anywhere in this area where my cursor's at. I'll in fact mark it. You can take it anywhere short here. Put your stop above the high for a nice fade to the downside. It's very, very simple, very straightforward. The key is just recognizing these patterns real time. Because at one point the S&P looked like, let me remove this. It looked like this, it looked like we were about to break to the upside. So right here, you're probably not thinking, oh, I'm going to take this trade short. It looks like we're going to break. But the next candle, we created another supply zone inside supply. Let's start consolidating a little bit coming up. Take it short anywhere in this area. Stop above the high. Would have never got stopped out for a nice fade to the downside. Here we have Roku on a 30-minute demand zone. We came down. You could argue that there's not really good confirmation here. The market moved down here pretty fast. And if you were watching price react to it, it kind of came up fast, about $2. So it would have been hard to get a good entry, especially with options and how fast the market moved up from demand. But the fact is the market came back down, again, looked like we were selling off. It looked like we were going to break the low. But the next candles, look at this. We started stalling out. If you have a higher risk tolerance, you have more experience in this, this right here is a valid place to take the trade long. Your risk is so small that this loss, if it does continue to come down, should not even flinch or affect your account. You're a little more conservative. You're still learning trading. Valid entries the next candle. We come up. Anywhere in this area when we're coming up, we have some type of bullish momentum. Take the trade long, buy calls, but just stop below the low. It's still very low risk, and then this thing ripped. So it's just double bottom in demand. Simple. So here's a wedge, a pennant type of thing where we continue to make lower highs and we also make higher lows. It starts getting tighter and tighter. Price is consolidating in between this wedge, and eventually we reject. Now, personally, I'm not too comfortable taking chart patterns if there wasn't a rejection of an imbalance prior to it. But the fact is that we did make a lower high inside of supply, marked here. And the fact is, if you missed something like that, we did break the wedge. Acceptable to take it short here. Maybe your stop above VWAP, maybe your stop above this high. A little more risk has to be put on the table for this, but we did break this pattern and continue to sell off about 3 or so points, possibly 4 points, towards end of the day. Last one for this segment, because we could go on forever about this. I could show you a million charts, but I want you all to get data, put it in your journal, identify zones that have worked out, see what your confirmation could have been, and then use that to improve on for the future. Make a log of every zone that worked, what didn't work, what you could use to improve on, what could you use to add to your strategy, that when you see something occur, maybe it's more confirmation for you. But just play around with this. There's tons of chart patterns that happen inside of zones. It's my favorite one to use. But the last one is Zoom. We had this weird higher highs breaking every time, lower or higher lows as well. We hit supply pretty much perfectly to the penny. If I remove these trend lines, not really valid confirmation anywhere in this area, even though we did tag supply. But the fact is that we did break that little trendish pattern. So this was a valid short. Not too much meat on the bone, but the whole idea here is just to make you rewire your brain for you to identify these type of opportunities. Look at some chart patterns, as in my opinion, they're the most reliable for beginners to spot at our zones, and these provide really, really nice trading opportunities.